Hey everybody, finally back after a long sabbatical. Been traveling a bit, doing some trading, but we're getting back into the groove of things. It is Monday the 12th of May, doing a market update for Bitcoin. First off, looking at some of the economic data that's coming out this week. Tuesday we have CPI data coming out pre-market open. Some potential volatility with that. The big announcement today that's critical is that there's an agreement, at least a potential pause for 90 days, where the tariffs are being lowered from down to 30% on U.S. goods to China, and China is matching that even more so by reducing the tariffs to 10% to the U.S. So effectively, the big trade war with China, it seems like it's getting resolved or coming towards a potential end, which is amazing. The market's already reacted very positively on this news. On Thursday, the big thing here is Powell speaking. A lot of this stuff coming out again pre-market. So if there's some expected volatility from Tuesday with the data dump, 100% expecting it on Thursday because this again is pre-market open. Looking at the long-short ratio going into Bitcoin specifically, we've been in a period of shorts or majority short in the market. Even here at these highs, we're still 60% short to long. So this is the expectation of the market trying to say, or people trying to short into the highs. This is why we keep ripping. Now there are a couple of factors getting into the liquidity of where if we're potentially coming towards an end, but for right now, the fact that shorts are coming in very aggressively, we don't want to potentially try and short the market until there's a break and people start longing, potentially trying to buy the dip. On the funding rate side, back to the standard 0.01. So this is neutral bearish, effectively shorts, longs paying shorts. That's just the way it is. So all standardized across the board on both token margin and the big three at 0.01. So shorts are being incentivized. On the liquidation side, so where we have actual big liquidations. So the higher time frame perspective here is actually pretty decent. The expectation is that we're coming towards a pocket right around 107.5, really close to the all-time high, where it's a relatively small liquidation area. Yes, I know 30, 40 million, it's still a lot, but comparatively, when we start getting up to about like 113 or 116, we're talking hundreds of millions. So we've ripped through the big short liquidations and we're getting potentially towards the end of it. The next big block, like I said, is 107.5. And above that, it starts to thin out very heavily. All that being said, there is some stuff below us. And until we fundamentally break 101.5, it's still upside trending. And this is vertical accumulation is what it looks like until we actually break some structure and levels. Onto the order book heat map. So this is just using Kayotaka here. We are still in this flat going to the upside. The positions above us, like the limit orders, are still stacked above us. So keep an eye on that. Uh, Lots at 110, lots at 112. So huge amounts of money still. We are technically still trending to the upside, right? This is a vertical accumulation block. Until we start losing the low, specifically the one at 103K, it still looks relatively good. If we start losing 103K, this then starts to break some stuff, and we probably round trip back to like 101, potentially under 100K. But until that happens, just remember you're trading in a flat upside. And with that, I will look over at the charts. So specifically, we'll go high time frame to down low time frame. Previous weekly high close is up here at 104.5, right? This is a really key big level. We've got a daily close above it, but no weeklies. The weekly close just underneath it. And then at 10, call it 103K, we have some really good daily support all the way down to like 102.5 where we have the February open. So this is still kind of the pocket that you want to see a strong hold on any retests, because if we do break this even on the daily time frame, we're probably looking to come back sub 100K, retest some of these highs, potentially coming back towards 97. So just keep that in mind from the very high time frame. Going down, looking at the 4 hour here, the announcement with Trump and the tariffs getting reduced had a nice market effect. TradFi saw the same thing pre-market. Big pop up to 105.9. You're still at resistance, right? This is the weekend structure. This is the high from or the open from Sunday. So you still have some pretty decent resistance there, and you're kind of stuck between that and the weekly open. Like I said, 103K. We've got support on the 4 hour, support on the daily. You've got multiple daily opens, and you've got the February open. As long as this 103K holds, like no closes underneath it, you're still technically looking for upside and potentially to squeeze through this resistance to continue that move up towards 107. Getting up to those highs, just remember, we're getting towards like the local liquidity pocket end, and we'd have to start jumping into like 110 and above to really get into the next major pocket of short liquidations and liquidity. So the expectation here is really simple. We're still grinding to the upside. We've got nice support at 103. We've got it below us. We've got it all here. Realistically, you want to see a close, a 4-hour close that gets you underneath 103K. If you start seeing that, you might start to see some Christmas tree action coming back towards 101.5, test some of this structure, and then potentially down towards 99K, where you can potentially see some retests. The big thing here is be cautious of the red button. Be cautious trying to short this because everyone's trying to short it, thinking we're overdue for a pullback, which we are. We're absolutely overdue on a pullback on the daily time frame even. So the expectation is that until you get this failure, every level is a potential buy to go higher, right? So only closing under 104 and solidly bearishly retesting. Do you then want to see retests at 101.5 and then sub 100K? Until that happens, right? Every level is a potential buy to squeeze through this resistance. Once this resistance is taken out, you expect to move up to 107K. And then just looking to the left, obviously, we do have some pretty big structure up here, 106 even, getting up to 107. It's into the real big highs. So just expect that to happen. That's still the direction of travel. If you're going to set some alerts here for potential short trade, 103K is the move. That's the low that matters. That's the daily bullish engulfing candle that we got from Saturday. So it's still strong. Don't fight against it. And the big thing, of course, is watching the capital rotation. Bitcoin dominance is breaking down. I'd mentioned this, in our community last week. On Thursday, we were starting to break down really hard. This is the rotation that is allowing lots of money to flow into things like Ethereum, things like the high caps and stuff like that. So watch that altcoin rotation. It's still playing out. Volatility's dumping. TradFi is looking happy. So, people say walk away in May, but it might just be, pump summer. All right. That's it. Take it easy. Catch you tomorrow.